Hi, I'm Kate, and this is a P&L overview. I decided to record this video for leaders and CEOs who might need a refresher on how to read a profit and loss statement, or P&L, or income statement. In this part 1, we're going to look at revenue. Some of the information here may seem somewhat trivial to some of you, but I wanted to record a comprehensive overview so that in case anybody needs a refresher, in case there are any questions, you can just get it from one place. Okay, so without further ado, let's start with the overview. Okay, first question is, why you may not know how to read a P&L? And the answer is not because you're uneducated or because you just don't know something. Sometimes it's because your P&L might actually be not that readable. And what I mean by this is, it's messy. The chart of accounts are messy, the categorization is messy, and it's no wonder that you look at the P&L and you absolutely cannot understand what's going on. Or you can understand some parts of it, but others are just not meaningful to you, or you are not sure what's going on there. In this video, we'll see what a readable P&L looks like for service businesses, and I'll give you some examples too. The examples I use will be some of the typical small to mid-size marketing or digital agencies. And an important note, if your business has pass-through revenues or expenses, your top line or gross revenue might be misleading. We'll need to correct that. And in this video, I'll show you how to see on your P&L what you're actually making, and how to construct your P&L so that you're actually able to tell what you're making. But before we dive into revenue, let's look at the overall structure of the P&L. A lot of you, I'm sure, are familiar with this report, but I wanted to show two examples side by side just to see that sometimes they can be more complex and sometimes they can be pretty easy to follow, but the structure remains the same. So on the left-hand side here, you can see the P&L from a publicly traded company. It's a services company, so a lot of the categories on the P&L might look familiar. And on the right-hand side over here, you can see the P&L from a smaller business, from a private business. And just zooming in on the first P&L from the publicly traded company, you can see that the top line is revenue. And it's always going to be the case for profit and loss statement. Revenue is always going to be the first thing that you see at the top. Please note that here it just says revenues, but if we go to the P&L for the private company, it says net revenue. And we'll talk about the differences between just revenue, gross revenue, net revenue, what those are, how different they are. But first of all, let's talk about what revenue is, because I like for everybody to be on the same page before we dive deeper into some of the concepts, and also fill in the gaps if there are any in the process. So revenue is just an amount of money that the company earned through its operations over a certain period of time. It's very important to distinguish that revenue is not the same as invoicing. So if you create an invoice and you send it, it does not necessarily mean that it's revenue. A lot of times it's going to be the case, but not always. For example, if you create a deposit invoice and you still haven't earned this revenue, if you haven't done the work, haven't provided the services, then you cannot record it as your revenue. And the opposite is true as well. Sometimes you have earned the revenue, but you haven't invoiced the client. So there's revenue, which you can technically record, but there's no corresponding invoice. Probably not yet. Another important distinction is revenue is not the same as cash, because revenue is something that you earned. Cash is the physical, actual cash you're able to spend. So whenever you record the revenue, usually you want to convert it into cash. That's the end goal. This happens when you get paid. But before you get paid, your revenue still remains revenue, even if you haven't seen the cash yet. Now with that out of the way, let's talk about the revenue itself and how revenue looks on a profit and loss statement. Sometimes you will see just one line, revenue. A lot of companies, and especially if they are smaller or they don't have diversified service offering, they will just have one or maybe two revenue items. They can call them just plain revenue or consulting revenue or services revenue. And a lot of times they don't even need to differentiate between the different types of revenue. But if you want to track of different types of revenue that you have, and here, those ways to organize your revenue, those are for you. Those are for the owners of the company, for the leadership team. It all depends on how you want to look at your data, how you want to track it, and depends on what is the most valuable for you. What do you want to track? So if you want to separate your revenue into more categories than just one revenue line item, what you can do is you can do a few of these. You can do revenue by service type, and that's the most common that I've seen. And I'll show you an example here. On the top left, you can see revenue And then underneath it, you can see all of the categories that this revenue is comprised of. So in this example, this is a media company. So you can see the categories that they're tracking. And going back to our list, the second one is by department. This can provide you great visibility if it's aligned with the way you budget. So if you budget by department, it's very easy to see your revenue by department, and it's very easy for all of the department leaders to understand how they've done on the revenue side, what they earned this month or during this period. It's very visual, and that's why I'm mentioning that it's great for visibility. The example of that is on the right-hand side over here. And you can see that this is an example that will be most applicable to a digital agency. So you can see that there are departments like engineering, design, QA, PM. Another couple ways to organize your revenue would be, for example, by acquisition channel, if that's something that you want to track and find most valuable for your business. You could also organize it by the type of billing. For example, if you're interested in seeing how much you're doing in time and materials projects, how much you're making in fixed fee projects and things like that. Another way to organize your revenue is by the type of revenue. And this can really vary depending on your business and what types of revenue you have and consider tracking. But in this example here, you can see that, and it's this example on the bottom, you can see that the revenue is broken down into projects, subscriptions, retainers, commissions and referrals, discovery projects. So really, this can be anything that you consider a revenue type for your business. You could also do by location. So if you, for example, are present in several countries, you might want to see how much revenue you're making in every specific country or even in every specific region within one country. You could also do this by platform. There's really no limit. It all depends on what you want to track as a business and what makes the most sense for you. Important note, depending on the software package that you're using for accounting and for tracking all of your expenses and revenue and invoicing, you can actually track more than one attribute. For example, you could do the service type and you could also do departments. And sometimes you could also do even 3 or unlimited. So you could do location, department, service type. I guess the only difference is what you choose as attributes and what you choose as the chart of accounts. So what is going to be shown on your accounting system's profit and loss statement if you dive into the details. But if you use additional attributes in your accounting system, this really gives you the opportunity to pull whatever report you need and slice and dice the data in any way, depending on how you want to see it by department, by acquisition channel, by service type, and so on. Next, let's dive into discussing what is gross revenue and what is net revenue and how are they different from each other. So gross revenue is all of the revenue that your company earned. Basically, it's everything that the client is going to spend with you for all of the services that you provide. Gross revenue may include even the pass-through expenses that are billable to the client. And those things are usually things like media spend or licensing fees or travel billable back to the client. Now, net revenue is the revenue that your company truly earned. And by truly earned, I mean something that it's earned for its services specifically. So it will exclude any pass-through costs. So for example, if you provided services to the client where your team went ahead and did something, that's your net revenue. But when you were managing ad spend for the client and you had to pre-bill the client for the amount of money that you used and then deduct the costs for it, depending on if you're making any margin on it, usually it's just a flow through, this would be part of your gross revenue, but it wouldn't be part of your net revenue because it's really just a pass-through, a flow through. You didn't do anything to earn it. You just used this money, right? Now, how do we arrive from gross revenue to net revenue? There really are 2 ways. We could lump all of our revenue under gross revenue, so that would include the revenue for our services and pass-throughs. And then we just list the pass-throughs that we subtract from gross revenue, and that's how we arrive at the net revenue. I've seen a lot of companies take that approach, especially if they don't separate on their invoices what is for the services that they provided versus the money that they billed the client to manage on their behalf. The second way would be to list pass-through revenue and expenses separately from every other revenue or expense. This gives you more visibility on your P&L and allows you to arrive at the net revenue more quickly. This is something that I personally favor because of the visibility, but I also understand that not all businesses will be able to do this easily. So here you can see examples of those 2 ways that I mentioned earlier. On the left side here, we can see that all of the revenue is lumped under gross revenue. That includes your services revenue and your pass-throughs. And then you arrive at the gross revenue. And below it, you list all of your pass-through expenses or revenues. They really would be the same amounts, unless you have markup. And then by subtracting your pass-throughs from your gross revenue, you arrive at the net revenue. The model on the right, though, shows you a slightly different picture in terms of the layout. So you can see that we're listing all of the services. So these are all net revenue. These are all that the company earned. And then all of the pass-throughs are listed as a separate line item. So all of those line items at the top do not include pass-throughs. And then when we list the pass-throughs, notice how this amount here and this amount here are the same. So really our net revenue over here would be the sum of all of these at the top. Next, let's talk about the types of reporting and format. Your P&L really can come in two ways. First one is something that you export directly from your accounting software. The second one is a more polished and cleaned up version that you will use for your monthly reporting package. This could be an internal package that would just be distributed to the management team, or this could be an external package that would be distributed to the ownership, to the board, to the bank, to whoever needs to look at the company's monthly performance. When it comes to specifics in terms of how to list the revenue and the pass-throughs, there are really two ways that you can do this in your software. You could use the contra revenue method, or you could use the cost of goods sold method. For contra revenue, you create a contra revenue account and you record all of your pass-through expenses as a negative revenue. So you can see over here in this example, there are two separate line items for revenue. There's the service revenue and there's pass-through revenue. These are just dumbed down a little bit for simplicity. And then you notice that this comprises the gross revenue, and then the pass-through expenses are listed as a contra revenue account, and by subtracting them, you arrive at the net revenue. This is different from the second method, which lists your pass-through expenses as just another account in cost of goods sold. So over here, you see all of your total gross revenue. Your pass-through expenses are part of cost of goods sold. So to arrive at your net revenue, you would need to take your total revenue and subtract just this one item, pass-through expenses. When it comes to the monthly reporting package, like I said, it's a report that's a little bit more polished. I don't know if you've ever seen an export from the accounting software, but if you export a detailed P&L, it will just list all of those accounts, and it can be a little bit messy and unsatisfying to look at, unless you want to dive into the details. So for the reporting that we want to distribute across the teams or to external stakeholders, we actually want to use a nicer and cleaner report. Revenue on this report would look something like this. We start with the gross revenue. We list all of our pass-throughs, and then we arrive at the net revenue. So this way we're showing, here's how much we've done in terms of all of our revenue, and here's how much we've done in terms of our net revenue, which is what we are really interested in the most, because this is what's showing how we're doing as a business. And then we show you how we arrived from gross revenue to net revenue. Another important aspect is you want to be able to break out net revenue into revenue by client. So all of this amount that you see on your profit and loss statement under net revenue, you should be able to map all of this to individual clients so that when you look at the list of your revenue by client, like you have here, you are able to arrive to the same total as what you see on the P&L. And this concludes our revenue overview. I hope this was helpful. I hope you learned something new and found something useful. And if you did, please stay tuned for part 2, where we will discuss direct expenses next. See you in the next video. Bye.